In this video, I'm going to show you guys the absolute best 1 minute Forex scalping strategy. I love to use this strategy on EUR USD, and I'll tell you a quick little fun fact. EUR USD is actually the most profitably traded Forex pair out of any pair, indice, or future according to my Forex funds. That's right. EUR USD is the most profitably traded Forex pair. The least profitably traded Forex pair or indice is US 30 and US 100. All right, so to start out with this strategy, you're going to essentially need two indicators. The first indicator that I want to use is an indicator that helps me understand the trend direction as well as the trend strength, and to make sure that I'm trading with the trend and not against the trend. That first indicator is going to be a group of EMAs. I have actually made an indicator that you guys can use for this that is 100% free. All you need to do is click the link in the bio, which will bring you to a page that looks like this, where you can view my indicator. Then what you need to do is give it a boost, a thumbs up right here, and add it to favorites. Once it is added to your favorites, you will easily be able to select it under indicators and then favorites. The name of the indicator is three-way EMA crossover by Kit Trades. So you'll find that in your favorites and you'll enable it. I already have it on my chart, and I'm going to show you what that looks like right now. So what this indicator does is it plots three EMAs on your chart. It plots the 25 EMA, the 50 EMA, and the 150 EMA. It also gives you this little icon here of the red triangle beneath and the green triangle above every time the 150 EMA and the 50 EMA have a crossover. Whenever they have a crossover, that lets me know a possible or likely trend change happening. So if we're looking at this chart right now and we only have this indicator that I created, the EMA crossover indicator on, then this is what we're seeing. And what this is telling us is that price is in a downward trend. And we know this because the price is below the 150 EMA, which is represented by the red line. Price is also below the 50 and the 25 EMA, indicating a strong trend, with the EMAs indicating a strong trend with the price being below all of the EMAs. Another thing that we can notate and look at here is that we have an indication right here on the kind of left side of the screen that the 150 and the 50 EMAs have crossed through each other, indicating a pretty likely trend change. We can see that price was just in an uptrend before now the EMA is crossing and a clear downtrend forming. So now that we have this indicator on, we can identify that we are in a downtrend, and we know that we are only looking for sell positions going with the trend, because the last thing you want to ever do when trading Forex is to fight the trend. Counter trend trades are less likely to be profitable than with trend trades, because a trend trade will only happen once per trend, whereas with trend trades can happen anywhere from 2 to 10 times or more per trend. So now that we understand our trend, and what we're doing is after this point here, we are looking for sells. So now we want to enable our next indicator, which is going to be the divergence for many indicators indicator. This is a 100% free indicator, and you can get it on TradingView by searching divergence for many indicators V4. For this strategy, you're only going to need these two indicators, so you can use it with a free TradingView account, because we're on the 1 minute with only two indicators, and you should have no problems or conflicts with TradingView. Load up the divergence for many indicators indicator, you need to go into the settings and change a few things. Where divergence type is here, the third line down, I want you to change that to hidden. And then I want you to uncheck everything except for the MACD histogram, the RSI, and the stochastic. Once you have done that, click OK, and let's get into the chart. So right here, we see a bunch of stuff on the screen, and let me break it down what everything means. Essentially, to keep it very simple, if we see a red RSI, that is indicating a bearish divergence, meaning that it's likely that the downtrend is going to continue. If we see a green indicator, that means a bullish divergence has emerged, and it's likely that price is going to continue upwards. Now, if we are in a downtrend, we don't want to look at any of the green icons. And if we are in an uptrend, we don't want to look at any of the red icons. So we're only looking for divergences that go with the trend. Okay, so we can see on this chart now that we are in a downtrend, and we've established that with the EMAs, the EMA crossover, and price being below the 150, the 50, and the 25. So now that we know that we're in a downtrend and price is below all of the EMAs, what we're looking for is for the price to pull back into the EMAs and show a continuation hidden divergence, so that we can actually see that happen right here. Price is going down, it pulls back through the 25 and the 50 EMA, bounces off the 150 EMA, and gives us a red divergence indicator. At this point, we could feel extremely comfortable to enter into a sell position. What we're going to do that is we're going to wait for the price to pull back through one of the EMAs and then enter. So in this situation, the price has pulled back through the 50 EMA, represented by the orange line. That means when price breaks back down through the 50 EMA with the trend, after a bearish divergence, we are going to enter, and we are going to set our stop loss at the EMA above the one it broke through. So in this situation, we would set our entry right here, where the price breached back through the 50 EMA. We would set our stop loss at the 150 EMA, which is the EMA above where it breached through, and then we would target a 1 to 1.5 RR. So you can see this would be the perfect trade right here. This trade would win, and now let's continue following price until we get to the next trade. So we can see that price continues to fall down and down, and if you were trailing this trade, you could actually make quite a few bucks. Price then pulls back above this 25 EMA and gives us a bearish continuation divergence, indicating another good position. So if we zoom in here, you can see that our entry would be at the end of this big red candle, because that is where the price broke back through the EMA that it originally breached. And we would set our stop loss at the EMA above, which in this particular situation would be the EMA 50. Like always, we're targeting a 1 to 1.5, which we get very easily. Now let's continue following price until we can see the next trade. So right here, price looks like it pulls back but doesn't indicate a divergence. So we continue to watch price, dips down again, and then this time it breaches the EMA again, and it gives us our continuation divergence. So at this situation, we would enter at the bottom of this candle, set our stop loss at the EMA 50, and target 1 to 1.5, which we would get right over here. Now, the end of the trend is coming, so let's closely look at that so we can know how to identify when the trend and the ride is over. So you can see here that price then came up and broke all of our previous highs, which is obviously Market Structure 101, a breach of trend. On top of that, the price came above the 150 EMA, and at that point, we are no longer indicating that we are in a bearish trend and the wave is over. At this point, we need to wait for a new trend to emerge before we start entering into these trades. To identify when there's a new trend, we want price to be above or below all of the EMAs, as well as a recent crossover between the 150 and the 50 EMA. I hope that I broke down the strategy very simple for you and very good, and that you understand it and you can get trading right away. Every indicator is free, and I'll post mine below. And like I said, you should be able to trade this with the free trading view. So I really hope that you guys can milk some profits out of this strategy, and happy trading.